Hey, what's up, guys? And I'm sure right now a lot of you are thinking about a recession and what is the potential turning points. So, in this video, I want to share one piece of data I read on Bloomberg, which I think is quite helpful when it comes to identify the turning points of the market and what we should expect going forward. So, when you're thinking about who actually is shorting the market, it's not going to be the mutual funds because their investment mandate actually restricts them from shorting the market. It is going to be rarely me and you, the retail investors. And I would say most of the retail investors who manage their own portfolio, their strategy is usually just buy and hold. So they're not going to be entering into short positions, which drives the market down. So when you think about the market, it's really the hedge funds that are able to short the market. Now, when you think about tech correction around 6 months ago, the center of it is really the growth of these loss-making companies, which is mainly invested by a fund called ARK, ARKK. And a lot of hedge funds are shorting it, and even they created a ticker called SARK to short these loss-making high-growth companies. And since then, it has dropped significantly. If we look at the short interest, which is the percentage of short positions against these companies, it should give us a fairly good indicator of what is the hedge fund doing and how we can think about the future going from here. So this is the Bloomberg article I'm talking about. The desire to short Cathie Wood's ARK is dropping almost as fast as the fund. So this is May 25th, 2022. I actually covered this within Investing Accelerator 2 weeks earlier, and I want to make a specific video on this YouTube channel so then you're aware of it. So if you go down, this is the image that you want to focus on. So you can see over time, there is a high accumulation of short interest, and then it peaked just around end of April. And now that short percentage is actually going down. So you can see that the hedge funds are covering their short, are exiting their short, because since then, the fund has dropped significantly. So whatever money they made, they're taking profits now. There isn't a lot of room remaining to continue to short the ARK funds because, well, they pretty much drop 60-70%. So if you are looking to buy technology stocks, I actually think this is starting to be a good time. I think we're still early. There are still a couple of issues like the war, COVID, that needs to be resolved before the market goes up. But the drop you see in the tech space is actually comparable to the 2000.com crash. So this is an interesting piece of data. You can pause this video to look at it. And to me, this is one of the many indicators that signal a turning point is coming soon. So if you have been sitting on the sideline, you're holding all cash, then make sure you start buying some stocks. You don't need to go in 100% immediately because there's still quite a bit of uncertainty in the market, but it is good to start buying in increments. So then you're building your positions back up, because the truth is you don't know where the dip is, and that is fine. And what's important is that if you don't know where the dip is, what is your strategy? And I think for a lot of us here, buy and hold investors, you're mainly going to be buying incrementally over time. You're not trying to plunge into the markets because you're not going to get that lowest low. Buy incrementally, set a schedule for yourself, whether that is monthly, weekly if that works for you. I think monthly is usually sufficient. I think quarterly is probably too spaced out. And what you're looking for is a change in terms of tone, in terms of the global COVID lockdown, basically China and the Asian countries, and a change in tone in terms of Fed and the upcoming election. So within Investing Accelerator, we do pay attention to these macroeconomic events and company-specific events during the weekly group coaching call. So this is just one of the examples. So if you're interested in learning more and you want to attend a free training on my website, then I'll include the link in the description below. So it's a 2.5-hour training, and it explains how I invest in the market and how to deal with increase in Fed interest rate, and also some of my past analysis in terms of the oil and gas sector. So if that interests you, click on the link in the description, and I'll see you in the webinar.